Hi, I'm Bill Carmody, and I'm the Marketing Whisperer. Today on the program, I would like to introduce Nikul Patel, who is the Chief Product Officer and Head of Strategy for LendingTree. Hey, Nikul, how are you?
Great, Bill. How are you doing?
Excellent. So I wanted to have Nikul on this program today to talk a little bit about some of the new innovations that LendingTree has done to actually bring big data to consumers. I'm really excited about the idea of when big data is put in the hands of consumers, people make better decisions. So Nikul, why don't you just start off talking a little bit about what you just launched and how that you think that's going to impact the way consumers manage their credit scores?
That's great. Bill, thank you very much for giving me an opportunity to talk to you about our latest innovations and our initiatives, what we are doing. So what we just launched, let me give you a little bit background. So we launched My LendingTree. It's a personalized logged-in experience of shopping for anything finance or at lendingtree.com. This is a personalized platform where you can see your credit score, you can see the changes in your credit score, what got changed, why your credit score went up or down. To augment the credit score is one facet of information, which is a great source of data. You can find all the addresses you lived on, like all the accounts you had, whether it's open or closed accounts. The credit card you had 10 years ago, you might even forgot about it, but your credit file retains this information. And credit file has some of the data which is missing. The important piece of the missing data is the home valuation data, because home is the largest asset most of the Americans have. This is by far the largest asset and the investment they have made in their life. Now, knowing where that home stands actually helps them make a lot of decisions and very important decisions. So let me run through some of the use cases. So many people, if you ask them, what is their home value? What is the house worth? They have probably no idea. But if you ask them how much money they need, they'll say, well, I need $30,000. Maybe
Right.
they want to plan a wedding, they want to fund for their kids' education. Now, they can go to personal loan. That's a great way to get money. They can also get a credit card. If they have great credit and they have great income, they can actually go out and open a credit card with a $30,000 limit and pull out the money that way. Or if they know the value of the home and they know the exact value of the mortgage, how much mortgage is remaining on their credit file, they can actually find the home equity. Now, home equity has a lot of advantages. Some people who are getting the home equity line, that home equity has a lower interest rate because it's backed by your home. At the same time, home equity often is tax deductible. So the net interest which you pay on your loan is much lower. So let's look at this particular example. A same borrower who wanted to borrow 30,000 could have gotten a credit card and does a cash transfer or
Right.
cash out kind of a thing. He could have done a personal loan, which often comes with a higher interest rate, but again, it's the right solution for right time. Or they can get home equity. Now, is consumer smarter about making these decisions on their own? Probably not. So what we want to do in My LendingTree is pull all this data, your credit file data, your needs, what you want, your goals, where you are in your life, as well as where your home is and what kind of things are happening around your neighborhood and how your home price is changing and what is happening in the market, how lenders are offering different kind of products. Personal loan offers available for you are absolutely different than available for me. The same way home equity offers, which are available for your unique situation, whether you are a veteran or not, that also impacts the different options available.
You know, I think what's really interesting about what LendingTree has done is that there are all kinds of different platforms like Equifax and whatnot where you can basically just get a free credit score. But I think what's interesting about what LendingTree has done is you've gone beyond that. You've actually said, look, here's what this means. Here's the implication of this credit score. And what I think was most valuable about what I saw was that you weren't just obsessing about sort of, okay, well, this is your credit score and this is what you can do, or this is how much money you can get loaned, for whether it's a home equity line of credit or a credit card. But it actually tells you, look, if you want to get better credit rates, here are things you can do to improve your credit. I'll give you an example. One of the things that I didn't know, I've always had a pretty decently high credit score, but I didn't realize that basically by closing out some of the accounts that I wasn't using, I was actually hurting my credit score. Now that was a surprise to me because basically I thought I was being responsible. It's like, I have a credit card, I haven't used it in like 5 years, this is silly, just close it down. And the act of closing that down actually hurt my credit score because now all the active credit cards that I have, I've only been using for about 2 to 3 years, as opposed to some of the ones that I had 15 years, those ones were really helping my credit score. So it's like really that kind of knowledge and power helps helps empower consumers, even ones that have good credit, get to great credit, right? Because now they actually say, hey, know how to use this effectively. Here are the things that you're being scored on, and this is how you actually take action against it.
Absolutely. And see, borrowing is a part of life. I think the day money was invented, or
Yes.
even before money was invented, the borrowing has been going on even in the barter system. So borrowing is going to happen and it's going to continue. It's all about responsible borrowing and then borrowing at the right cost. Now, that's where most of the Americans, and we have seen in our database, that we get royally screwed in a weird way. Because
Yes.
if you don't compare shop, you will end up paying about $14,000 to $15,000 on your mortgages. So our research suggests that about 50% of the people, when they're looking for mortgage, they get the first mortgage offer they get and they go with it. If you compare shop, they save about $14,000 to $15,000, which is a sizable chunk
That's
of
huge.
money for most of us.
Yes.
Now, this data has been validated by Consumer Finance Protection Bureau as well. So what we are trying to do is provide the credit data. Credit file is an amazing amount of information, but most of the people get obsessed about the score. Now,
Right.
score is absolutely important. Please don't take me wrong on that one. But that is commodity. Your credit card statement is also showing your credit score. So I think it's good that consumers are aware of their credit score, because 5 years ago, that was you had to pay $9.99 a month to get your credit score, right? But now that's available for free.
Well, and
But
that's the thing. I think what's beautiful about what you've built was anybody can provide just a free credit score, and I mean this. I don't mean to make the light of this. 5 years ago, it was still expensive to get a credit score, but now you get it for free. But there's lots of places you can go to get a free credit score. The difference is with LendingTree, what I really admire is that you've put the intelligence into the platform. And I want to get back to this because big data is only as valuable as the insights that it provides. And I think one of the biggest problems in marketing today is that people are swimming in data, but they don't know what to do with it. And especially when you turn big data on its ear and give it to consumers, it's so important that you then say, here is the implication. So yes, this is your score, but let's break this down for you. We have different sections of what's driving the score. You need to understand what each section is doing, and then you have to understand what to do about it. So for example, you might find that there's an error. Somebody actually made a mistake and it's been hurting your credit score ever since. That's actually costing you money. By rectifying that error, you now certainly can turn your credit score around, and you really haven't done anything other than just making a mistake go away, right? So there's little things you can do, and that's the difference, is that when people have data in their lives, they can actually make more intelligent business decisions. And what you've done is you've opened up the data to allow consumers to really understand exactly what it is that they should be doing differently to improve their credit score, reduce their cost of loans, and understand how to unlock things like their home equity line of credit, which probably they haven't been thinking about is a sort of a way to sort of get the money they need and pay down their credit cards and things like that.
Absolutely. And if you look at like 2008, or 2006, 2007 timeframe, home equity was everywhere. You will get bombarded with the flyers, and you will be bombarded with TV advertisements about borrowing money from your home. But after 2008, that product pretty much went away.
Yes.
Because of what happened in the financial market. But now, as the interest rates are rising, credit card cost is going to go up. Personal loans interest rate will rise too. But at the same time, the home valuations are much higher than what it used to be in 2008, 2009 downturn. Many people's homes are now valued like quite a bit more. Many homes are now above water, if you will.
Yes.
When your mortgage is actually less than your home value, that's actually a good feeling. And we wanted to make sure that people understand the asset which they have, where does it stand. And
I want to say one thing different. I respectfully disagree with one thing you're saying. I actually think when a home has a mortgage on it, the asset is an asset, but it's an asset to the bank. What I want to rectify is for people who are watching this, is it's really the largest asset that the bank owns that you basically pay into. And so part of your objective is how do you pay off that loan as quickly as you can, or at least take the maximum deductions you can get off of that actual cost, because it only is an asset when it's basically free and clear and you own it. And to your point about the home equity line of credit, like seeing exactly how much you still owe on your mortgage and how much you could take out, that's telling you what percentage of house is actually an asset. The rest of it's a liability.
You're absolutely right. And again, when I refer to asset, what I refer is that your home value minus your loan. So that's
Yes.
what I call it as.
Yes.
So thanks
Well,
for clarifying.
no, but I make that distinction because that is really important because most people say, well, I own the home and so therefore it's my biggest asset. Well, the fact is, if you basically have most of that asset owned by the bank, meaning you only have 10 or 20% of that asset that you put down initially and you're just paying off your mortgage, it's your biggest liability. And so the idea of calling it an asset when it actually is a liability is a big reason that people run into financial problems, right? Because what do? They basically mortgage their house until it has nothing left to give. And then what they do is they go to their credit cards and they max those out. And what ends up happening is people naturally spend more than they make. And so part of what I think your platform does brilliantly is helps people realize, okay, wait, this is my actual financial picture. This is exactly how the world sees me as it comes to credit worthiness. My credit cards, my loans, everything in one place. And by able to do that, if you hold up that mirror, then you can basically say, okay, well, what do I want to change? What are some of the things that I want to do differently? How do I want to make sure that the picture the world sees for my credit worthiness is the picture I want to give, right?
Absolutely. And that's exactly the point. And I think you articulated it beautifully. And what we are doing is credit score historically, when you go apply for auto loan or you apply for a mortgage, has been a snapshot.
Yes.
Look at you as a snapshot and says, okay, where does Bill stand today?
Yes.
Now, at that particular point, I'll give you one great example. If you have a $10,000 credit limit on a credit card, and just happens that that's the month where you went on a vacation and you spent like $8,000 on that credit card, your credit utilization will be viewed very negatively.
Yes.
But when you are part of this kind of a membership program, we will actually let you know that, Bill, your credit score went down because your credit utilization is high because you spend more money on this particular credit card. Now, you might be responsible and you might pay off that credit card next month, and then your credit score goes up to, say, 740, 745.
Right.
You get a much better loan than if it was 680. So providing not only the snapshot, but providing the trend line is also very important for us.
Now, I want to ask you a question because in the Wall Street Journal today, one of the interesting things that came out, they're talking about PayPal and I'm going to say this wrong. I should know this. Vimeo, is that the cash to cash sort of side of this. I think a lot of millennials today are really excited because they don't have to pay the transaction fees. There's all these other things, and they're super excited about trading cash here. I want to basically ask you, because I have an opinion on the matter, but I want to get your perspective. When people sort of sidestep the credit industry, I think while they might be saving a few bucks here and there in terms of fees and transactions and charges and like that, my assumption is that that's actually hurting them in the long run because basically they are not putting together a good credit history that they'll need in the future. Am I wrong about that, or do you agree?
No, I agree with you, and let me elaborate more on that one. So PayPal is a money transfer mechanism.
Yes.
Now, money lending and borrowing is actually a completely whole different game.
Yes.
Because when I want to borrow money from you, Bill, you're going to look at me as an individual. You look at my credit history. You look at my income. So that's a whole different risk and reward equation comes in the picture. So again, let's separate the money movement part, which is what PayPal does beautifully.
Yes.
Vimeo does it great. Visa, MasterCard build out amazing networks doing just that. So, and ACH is a great mechanism to move money. So moving money is getting much more efficient. I think PayPal and Vimeo and others have done a fantastic job about it.
Yes.
But whenever you are going in a lending transaction, when you are borrowing the money and you are paying it off, I think most of the institutions are still respecting the entire credit spectrum and the credit bureaus. So even if you borrow money in a peer-to-peer setup on, say, prosper.com or lendingclub.com, you go out and you borrow money, that will show up on your credit file.
Okay.
So you do get credit for that. So I think while the innovation is happening on a money movement side as well as on the lending side, whether it's a peer-to-peer or peer-to-institution, however you are getting the money, the credit bureau plays a very important role in the picture. Now, where I see the problem areas, and that's where I think we should educate consumer more.
Mm-hmm.
So for an example, if you're renting apartment, you're probably paying, say, $1,200 rent. If you're in San Francisco area, you're paying probably
a lot more.
Now, many part of the world, you're paying probably $2,000 for mortgage, but that goes on your credit file. But wait a minute, you're paying rent. That's also, shouldn't it go on the credit file? But it doesn't, because it's actually viewed as you're just renting my place, but
right.
You haven't borrowed the money. But the mechanics about it, like you look at the individual, like Bill as a person or Nikul as a person, the burden of paying $2,000 in a rent is the same burden as paying $2,000 in mortgage. I completely understand one is a borrowing and one is consuming, but I think as the industry evolves, what you will see is that many of these payments will make it to the credit file. And actually, we should encourage our bureaus to go out and seek out, like your mobile phone costs like probably good $40 to $100 a month. So that is very important that it goes on your credit file. And we are actually seeing a lot more innovation coming in that area because millennials by design don't have credit cards. They don't have, many of them are now doing Uber, so they don't have cars even.
That's
so
right.
No car loan. So how would they build the credit? So one of the initiative which we are taking is like, we want everybody to open an account on LendingTree. We just show them what you have.
Yes.
And then all you need is probably get a $250 secure credit card. And secure credit card is a great way to start building the credit for many of these people. So again, I'm just doing for my own kids, and we just want to make sure that they have a good credit because you are absolutely right. Millennials are ignoring that particular piece. But I just wanted to elaborate more on the money.
No, it's great.
Versus borrowing.
Because I think part of the thing about it is that the perception is that if I have a credit card, I'll abuse it. But I think the good thing about sort of having a credit card is learning how to be more financially responsible. And so from that perspective, by having a credit card, what you're actually doing is you're training yourself to basically only spend what you have and not get yourself into a debt scenario. But the idea of not having credit at all is actually worse when eventually these millennials are going to want to own a home. They're going to want to basically borrow money for a business. They're going to have all kinds of things in their future. And if they really haven't established their credit score now, it's going to be really painful when they go to a bank and they're like, I don't know how to even judge you because you don't really have a credit score. And now I'm looking at your Facebook profile. It's the wrong thing entirely.
Yeah, so. And we have seen some of the lending going in that direction. But I think social validation is a good validation, but it's not a replacement for your credit file or your actual validation, meaning credit file, the FICO scores. These are the real validation which you get.
Yeah, that's good. Well, listen, I really appreciate your time today. This has been a fantastic conversation. I think that anybody who hasn't gone to mylendingtree.com should go check out the new credit score apps, all the things that exist there. You've built all these free tools which are invaluable to help make sure you understand how the world sees you as it pertains to your credit, and giving you all kinds of education and tutorials to ensure that you actually know how to make it better. And that's the thing. It's like, it's one thing to know where you stand, but if you don't know how to basically make it, improve upon it, what's the point? I think you guys have spent a lot of time building something that's very valuable. So thank you for doing that.
I think, Bill, thank you very much for kind words. And we are absolutely in infancy of this product. Where we want this product to go is absolutely provide the transparency. There is data available. Let's just aggregate the data, show you the data. Second thing, the second step in the process is let me analyze the data and tell you what you should be doing.
Yes.
And the third step where we really want to go is anticipate your needs. So if you are using Google or iPhone products, like Android or iPhone products, Google will tell you that you should leave for the airport now because there is a traffic on the way and I know you have a flight to catch. You did not ask Google to do that for you. It just does it for you. So where we want to go is like, because many people are not proactively shopping for financial solutions. Even it's a painful process. It's not something which is exciting as like walking in the mall or something like that. So what we really want to know is like, if we know where your house is, what is the value of the house, when did you get the mortgage, how much interest you're paying, and what your goals are, we want to recommend it. Whenever we find the best deal for you, we'll keep searching for that. And we'll proactively say, Bill, time to refinance, go into the 15 years because 15-year mortgage for you is right at 3.5%, and here is a lender. Click here to get it done. So that's where we want to go, and that's what we are working towards.
Well, and what I want to point out here too is, Nikul, you've basically built a sort of mini data scientist for each individual that's using your platform. What I mean by that is that it's not just looking at the data, but it's actually saying, I understand what you want, and I'm going to share you with the alerts based on things that are going to be very proactive around your needs as sort of your credit scores, in terms of what you're trying to do in terms of building your credit history. And so whether it's better credit cards that have better APRs or lower interest rates, specifically around no fees, or something that's really hot in the marketplace you should pay attention to, by understanding the details of a person's particular credit situation, you are empowering them to basically make better financial decisions and improve their credit score over time anyway. So all the more reason to go in and participate. It's good.
Absolutely.
Good.
Great.
Nikul, first of all, Nikul Patel, the Chief Product Officer from LendingTree, thank you so much for your time today. I really appreciate everything you've shared with us. I think this was hugely valuable. Thank you.
Thank you very much. I appreciate your time. Bye bye.